Okay, let's unpack this. Welcome back to Deep Dive. Today, we're digging into a really interesting day in the Indian stock market, June 27th, 2025. On the surface, things looked pretty calm, positive even. But when you look under the hood, at the data you've given us, those open and close prices for Nifty and Bank Nifty, the institutional money flows, the technical levels, there's a fascinating story. Our mission right now is to piece that story together. What really happened? And maybe more importantly, what clues does it give us for the next trading session?
Exactly. And what's captivating here is how all these different pieces fit together. You have the index movements, you have what the big institutions are doing, the FIIs, the DIIs, and then you have the technicals, the charts whispering signals. It all connects. We're not just going to read out numbers. We're aiming to decode what it all means, to give you that deeper understanding of why things happen, not just what.
Absolutely. So let's start with the basics, the headline numbers. How did our key indices, Nifty 50 and Bank Nifty, actually perform on June 27th? Let's kick off with the Nifty 50. It opened at 25,179.9 neo. It touched a high of 25,317.7 neo during the day. And crucially, it finished strong. The close was 25,637.80. That's a gain of 0.35% for the day. Pretty solid. A solid day indeed. And looking bigger picture, the Bank Nifty mirrored that positive sentiment. It started its day at 57,234.70, did dip a little, hit a low around 56,993.85, but it climbed back, peaked at 57,475.40, and ended the session strong at 57,443.90. That's a gain of 0.41%. So both main indices firmly in the green. So it's a positive tone, right?
Definitely.
And speaking of tone, or maybe market mood, we should look at volatility. The India VIX, it actually dropped, fell to a 9-month low, closing around 12.38. That's down about 1.67%. And importantly, it stayed well below that sort of psychological level of 15 all day. Okay, a VIX at a 9-month low, that usually signals confidence, less fear in the market. But, sometimes when volatility gets this low, does it maybe hint at a bit of complacency creeping in? Is that a risk?
That's a really sharp point. And yes, extremely low volatility can sometimes precede sharp moves if there's a sudden shock or catalyst. Complacency can be a risk. However, for this specific day, June 27th, the VIX staying consistently below 15, especially at a 9-month low, it mostly signals comfort. It suggests participants weren't seeing major immediate downside risks. They felt confident enough to trade without expecting big swings. So the question then becomes, was this feeling of comfort justified? Was it backed by broad market strength?
Exactly my next thought. So the main indices look good,
Yeah.
but was everyone joining the party, or was it just a few heavyweights doing the lifting? That's where market breadth, the advanced decline ratio, really tells a tale. What did that look like? Well, looking at the NSE figures, get this, 360 stocks advanced,
Yeah.
and only 23 declined. That's huge. And even within the Bank Nifty stock specifically, it was 7 advancers versus 5 decliners. Still positive.
That NSE ratio is truly remarkable, isn't it? 360 to 23. That signals incredibly strong market breadth. It means the positive sentiment wasn't narrow at all. It was broad-based, widespread participation, lots of stocks moving up. That's generally seen as a very healthy sign for the market's underlying strength. It suggests it's a genuine rally, not just index management.
Okay, so broad strength confirmed. Now, let's follow the money. The big players, FIIs and DIIs. Foreign institutional investors and domestic institutional investors. Their activity in the cash market often gives us huge clues. What were they up to on the 27th? Well, the FIIs. They were definitely net buyers, a pretty substantial inflow of plus 1,397.0 crores. If you break it down, their gross purchases were huge, 19,740.8 crores against sales of 18,343.8 crores. That net figure is significant.
It really is. That clear, strong inflow from FIIs is a major data point. When foreign capital comes in like that, it's often interpreted as a strong vote of confidence, confidence in the market's prospects, maybe the broader economy. Now, here's the interesting counterpoint. The DIIs, the domestic institutions, were actually net sellers on the same day. They pulled out a net amount of magnitude 588.9 crores.
Okay. So FIIs buying aggressively, DIIs selling. How do we read that? Is it conflicting?
Not necessarily conflicting. It can actually be a sign of a healthy, dynamic market. You might see DIIs taking some profits off the table, perhaps reallocating funds after a good run, perfectly normal. But the fact that strong FII buying absorbed that selling, and the market still closed positive with that amazing breadth, well, it paints a picture of robust underlying demand. It suggests that the conviction from foreign players, at least on this day, was quite strong and able to support the market.
Right, that makes sense. Robust demand meeting some profit taking. Okay, so I've got a snapshot of the day. Positive close, low volatility, great breadth, strong FII buying. Feels quite bullish. But markets rarely move in a straight line. Looking ahead to the next trading session, what are the key levels we need to watch? Where might we see pauses or support or resistance? This is where things like open interest and those Fibonacci levels become really important guides, right?
Absolutely. Think of them as navigational markers. They help us anticipate where price might react. Let's start with the Nifty 50. For support, there's a really noticeable zone building up. I'd say roughly between 25,100 and maybe 25,470. It's not just one line, it's a confluence. You've got key Fibonacci retracement levels landing right in there, plus some significant intraday levels from recent action. Specifically, if you draw fibs from the recent swing low around 24,740 up to that high near 25,637. The 0.382 level comes in around 25,300. The halfway point, the 0.5, is near 25,180, and the 0.618 is down near 25,080. See how they cluster? That whole area, especially around 25,450 to 25,480, looks like a critical support zone. Dips there might find buyers.
And just quickly, for listeners maybe not as familiar, why are those specific Fibonacci percentages 38.2, 50, 61.8? Why are they so widely watched?
Good question. It's partly technical analysis tradition, partly self-fulfilling prophecy. These ratios appear in nature, and traders found they often mark key retracement points in financial markets too. Because so many traders and algorithms do watch these levels, buying or selling interest tends to cluster around them, making them significant potential turning points. It's market psychology meeting math.
Got it. So, strong support zone identified for Nifty. What about the upside? Where's the resistance?
The immediate hurdle looks like 25,800. That's a round number, often acts as a psychological barrier. If Nifty can decisively clear that, then the path opens up towards test of its recent highs, maybe even that all-time high territory, which is up near 26,277.
Okay. And shifting gears to the Bank Nifty, similar analysis. Where are its key zones?
Very similar process. For Bank Nifty support, the zone around 56,800 to 57,000 stands out immediately. What's interesting is that this 57,000 area used to be resistance. Now, holding above it turns it into potential support. That's a classic technical pattern resistance flipping to support. Plus, open interest data suggests traders have built significant positions expecting support around this 56,800, 57,000 level.
Okay, so former resistance, now support, backed by open interest. Any other layers below that?
Yes, there's another strong technical support cluster converging a bit lower, around the 56,200 to 56,350 area. You've got the key 61.8% Fibonacci retracement from its recent swing low to high, sitting right around 56,319. And that aligns really nicely with some important moving averages. The 20-day simple moving average is near 56,246, and the 40-day exponential moving average is around 56,119. So multiple indicators pointing to strength in that zone. It's like a safety net.
A multi-layered safety net, right? Sounds like solid footing for the Bank Nifty. And on the resistance side for Bank Nifty, where's the ceiling?
The immediate resistance seems bracketed between 57,000, which is trying to hold as support, and about 57,300. A decisive breakout above 57,127 is what bulls will be watching for. That level is interesting because it's near the 0.786 fib level too. Getting through there could really open the door for a push towards that next big psychological level, 58,000, maybe even higher.
Okay, so we've looked at the indices, the breadth, the big money flows, and now these key technical levels. Let's try and synthesize this. What's the immediate takeaway? What does this all mean for you, the listener, looking at the next trading session?
Well, summarizing for Nifty, the outlook seems tilted bullishly. That 25,450 to 25,480 zone is really key support to watch on any pullback. Buyers might step in there. A clean break above 25,800 could indeed signal the next leg up, potentially towards challenging that 9-month high near 26,277.
And for Bank Nifty?
For Bank Nifty, that 56,800 to 57,000 support zone looks solid, especially with the open interest backing it up. The trigger for more upside seems to be a breakout above 57,300. If that happens, 58,000 comes into play pretty quickly.
So if we tie it all together, markets closed firm, breadth was fantastic, FIIs were buying, volatility was low. These are, pretty much ideal conditions for potential bullish continuation.
Exactly. The technical levels we discussed, the Fibonacci's, the OI zones, they just reinforce where the potential floors are. And the resistance levels give clear targets for where a breakout could lead. It paints a fairly clear picture, technically speaking, for the immediate path ahead.
That was a really thorough deep dive into June 27th. We've covered the key price action, the institutional moves, and those crucial technical signposts. We really hope you found these insights helpful. digging into the why behind the numbers.
And this maybe leads to a final thought for you to chew on. How might really internalizing these support and resistance levels and tracking that FIDI flow actually change how you interpret the daily market buzz? Does knowing where the potential technical battlegrounds are and seeing where the big institutional money is moving, does that make you think differently about market psychology versus just looking at a price chart? Something to consider?
Definitely something to think about. Thanks for joining us on this deep dive. Keep asking questions, stay curious, and we'll be back next time to unpack more market action.